Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend, Sam Clement. Sam, say hello.
Hey John, how are you doing?
I'm doing very well. I hope you're doing well.
I am. It's a good week so far.
It's a good week so far. Last week, Sam, we talked a little bit about cryptocurrencies and just kind of what maybe their role will play in the future. And I understand that you had some questions about cryptocurrencies and you had some questions about just inflation in general. And the thought process is that, at least from what you told me, that you have a friend or associate that believes cryptocurrencies, one of the big advantage of them is that they will limit potential inflation moving forward just due to the relatively limited supply of them out there. I guess more specifically Bitcoin, despite the fact that Bitcoin can be broken down into almost infinitesimal, smaller units. So, Sam, I guess this begs the question. Despite the advantages and disadvantages of Bitcoin, is a little inflation always a bad thing? Or is it preferable to keep a lid on inflation moving forward? Your thoughts?
Well, I'll start out with what I've heard and viewed as a partial argument for them is the fact that they are actually deflationary. Because how great does that sound if I go to the store right now and then I go in a month from now and prices are cheaper? I mean, that sounds pretty awesome to me if my grocery bill kept getting less and less. But that's where the validity of deflation being a good thing kind of ends for me. And there's lots of issues, and I was talking about it with my friend about the issues, and we probably won't get into all of the issues of deflation, but it's crippling to the banking system. It's hard for, why would I go spend money now if I could wait a little longer and get it for less money? And so what it does is it incentivizes hoarding, and it incentivizes too much savings. And as weird as that sounds, savings always isn't a good thing. With how much of a consumer-driven economy we are, there needs to be some incentive to go out and invest, to go out and buy things now. They often show a chart of the loss of value of a dollar over the last, say, 120 years. And I go, that's not really a bad thing in my estimation. I mean, we don't want people holding dollars for 120 years. That is, to me, it slows the economy, it slows our growth, and it slows the expansion of us as a country.
Well, Sam, I would agree with you on that. You and I have talked in the past about how really from the beginning of mankind, up until about 1800, there wasn't a significant difference in standard of living around the globe. Yes, there have been some improvements, minor ones, and there had been certainly some new technologies being developed. But when you take a look at per capita income from, say, 1400 to 1800 in the United Kingdom, and I'll look this up, it grew 17 basis points on average per year. And when you take a look at from year 1 to year 1400, it's about 17 basis points per year. Essentially almost no growth. And at the same time, we didn't really have a true banking system. Banking was more money changing than anything else. It wasn't fractional. It wasn't making loans to any form or fashion. It truly was just people that held your money and then kind of changed it on down. Occasionally they would finance certain things, but the average person didn't necessarily have access to debt, to capital until, Sam, until we stopped demanding gold and silver coins every time we entered into a transaction. So when modern banking really took over in the 19th century, we saw a huge extension of credit. And that extension of credit, in my estimation, led to the massive gains in economic activity we've seen over the last 200 years. And yes, it has brought inflation at times. And yes, the currencies are now relatively worthless, but is an intrinsically worthless security just the price that you have to pay in order to have widespread access to capital, if you catch my drift? Your thoughts?
Yeah, I think so. And I think we have seen partially an expansion. I think you hit on a good point, and that being the fractional reserve system, and that being how banking, modern banking, what we call banking, creates money.
Yes.
If I go put $10 in the bank and they go lend that out, they're going to lend out, and there's going to be new money in the system. And that is a big driver of modern economic expansion. It is the growth in the money supply, whether it be through fractional reserves or be through just actual printing of bills.
Well, you're right on that. And what would you think intuitively? And this is all just opinion. There's absolutely no way of knowing. What do you think would happen if all of a sudden the U.S. Treasury said, "Okay, we're going to back all these banknotes with the gold supplies that we have at the the Federal Reserve Bank of New York, Fort Knox, all that stuff"? What do you think would happen for the demand on gold?
It's a good question.
Well, I think personally, the same people that love cryptocurrencies would find themselves going, I think I'm going to get some of this pretty sweet gold,
I
gonna
mean,
get it. It's pretty easy. And I think there'd be a huge demand on the bullion supply. And then with more gold and specie in individual hands, then guess what? We'd have inflation that way too.
yeah. And there's always been some sort of inflation. I mean, even with the gold standard, it's a pretty standardized level of inflation due to the amount of new gold being churned out of the earth. But there's always inflation. I mean, again, I can't reiterate enough how some inflation and a normal expectation of inflation is a good thing. It is not a good thing to me, by my estimation, for a dollar to be worth the same now that it was worth in the 1840s.
How could I argue with you on that? And people that want to see that relatively stable dollar are kind of wishing for maybe something that just, I mean, they have to be careful for what they wish, truthfully, because if that dollar has the same purchasing power now as it did in 1800, intuitively, Sam, we would have the same access to goods and services as we would have had in 1800.
Right.
I mean, there would be no competition for that next dollar. A pound of bacon costs them, $8 now. It's in 200 years. Let's say it costs $8. Guess what? No, that's not necessarily great for anyone.
Well, I'll just, if I don't need it now, I might as well just save it in cash and put it under my mattress and do nothing with it. I could find a pretty little wood treasure box and put all my money in my backyard, and there'd be no reason not to take dollars out of the, I guess, supply.
Well, that's right. If you think there's not going to be any inflation, you think there's going to be deflation. And deflation is really nothing more than the value of your currency is going up faster than the prices of goods and services. I mean, you can look at it that way. Why in the world would you ever part with your cash?
Well, that's the thing, I think is funny about these some companies now accepting cryptocurrencies as a form of payment. And so many of the people I've heard that say they want to do that are also extremely bullish on the price rally of these cryptocurrencies. And that's where I see a disconnect in the cryptocurrency market. Is if somebody was wanting to buy a car, you would think you would want to buy it with something that's going to become increasingly less worthless than to give that person the thing that you have a viewpoint that is going to continue to skyrocket. And it makes sense. If I was going to buy a car and I could buy it for $50,000 this week or $40,000 next week, who in their right mind would buy it for $50,000 this week?
Well, you're right on that. And you also bring up a very good point. And I've heard the arguments, I've read the stories, I've watched the interviews. Those people who are the most bullish on cryptocurrencies and believe that they are going to be the methods of exchange in the future are also those that really don't want to part with them.
Yeah.
And so what they're doing is making a bet that their current cryptocurrencies are going to go up in value. And if they feel that's the case, why would I get rid of my Bitcoin if I think it's going to go up to 100,000? Why would I get rid of it to go buy a car which I know will depreciate as soon as it comes off the lot? That doesn't make any sense.
Yeah.
So in that situation, is deflation a good thing? Is having the value of your currency go up faster than the value of the goods and services that currency can purchase a good thing? And I would argue it isn't, because you would just hold on to your cash.
Well,
You wouldn't invest and you wouldn't consume. Well, I mean, you'd have to consume to a certain degree to stay alive, but that's when you start seeing economic activity truly slow down.
yeah.
When the money supply is constrained, there's no value for it because the value of money itself is just too precious to part with. So that's why I would say a little inflation is a good thing. And actually, it's even inflation numbers that would be unconscionable in the United States at present aren't necessarily a bad deal. Like, I was talking with a client not too long ago, and we were talking about inflation. I said, well, so what if inflation gets to 5%? Well, that's horrible. I said, if it's at 5% and interest rates are at 7.5%, what's the real interest rate? They
Yeah.
said, well, 2.5%. I said, is that unconscionable? No. So as long as my personal income is growing faster than the rate of inflation, Sam, we have inflation growing 100%. If my income, my real income, I mean, my income's growing by 500%, I'm still better off.
Yeah, and I guess some of the fear is, around the stagnation of wages that we've seen. But you're absolutely right in the fact that inflation is also a known beast. It's known how to kind of cure it and how to fix that problem. Where deflation is a lot trickier, and you have to get your hands a lot dirtier, so to speak, through the Federal Reserve to get your way out of inflation, where it seems like it's the beast that we know with inflation. And I think that's tends to be why we tend towards exactly what you said. It's what's the real interest rate, but it's a known thing, and it's known how we can kind of fix that and solve some of the issues around it.
Yeah. So kind of going back to cryptocurrencies and your friend's contention, and where people just arguing for, cryptocurrencies, about how the limited number of Bitcoin was at 23 million or something like that.
Yeah, 21 million.
21 million, despite the fact that it's divisible all the way down to Santoshis, and I forget Satoshis. I forget how many those are. The thing that a lot of people that are the cryptocurrency proponents, who are really largely holding on to their cryptocurrencies anyhow, and trying to admonish other people to use their cryptocurrencies, if you catch my drift, that they're not taking into account is all of these are divisible by any number, and there's really not any barrier to entry, in my estimation, outside of the cost of building out the algorithms and what have you. So, Sam, if there's no barrier to entry, if there's no barrier to you creating Sam coin or me creating Greek God coin, then how can we sit there and say that cryptocurrencies as a class are not inflationary, since we'll be creating untold numbers of them, particularly when we consider that they're going to be divisible? Your thoughts?
I get it. I think the argument is almost a sense of when one, ekes out such a large market share that it becomes the only one. And that's what they're fighting for, and different technological platforms. And that was the big thing back when Bitcoin Cash split off from Bitcoin and created their own using different technology, which is above my pay grade. But I think that is a good point.
Yeah. So I got to tell you, it doesn't matter if it's cryptocurrencies, paper currencies, gold, or what have you. Money's money, and people, and when you have some measure of inflation, money will tend to move around quicker than when you have no inflation. I mean, we've seen that over and over again. We've particularly seen that over the last couple hundred years. When you create money in the system, it changes hands by definition. So,
and you need it to.
And you need it to.
We've talked a lot about the GDP equation and how much of it is the C, the consumption, the consumer, the producer. Really, that's our economy. I
Yeah.
mean, you have your investment, you have your government spending, you have your net exports, but what, 70-ish% of it is the consumer?
Yeah, a little bit less than that, but yeah, it's up there.
64, 70,
That's about,
around it.
why don't we just say roughly 2/3?
Yeah, I mean, it is the overwhelming majority
Yeah.
of our GDP.
Oh, it's
And
fair to say how
so
goes the U.S. consumer is how goes the U.S. economy, without a doubt.
and so if we start to get into deflation or have a deflationary currency, that could cripple 2/3 of our GDP.
It could cripple a lot more than 2/3 of our GDP. I mean, it would
Well,
certainly.
it cripple the investment, it cripple our net exports, it would cripple the whole thing. But the easiest logical argument to me is people will go out and spend less, so the consumption part of it is going to already be significantly dampered.
Yeah, I mean, if your money is worth more than the stuff you're buying, or will be worth more than the stuff you're buying in a relatively short period of time, then why would you go buy it?
Exactly.
I mean, just hold on to it. I mean, of course, we have various things. I mean, shoot, a television or what have you. I mean, those things just go down in price all the time. But I think we're coming up to the same conclusion that one of the arguments for cryptocurrencies is they're anti-inflationary. Okay, be that as it may, no one likes runaway inflation, and I get the point about fiat currencies having no intrinsic value. But then again, you kind of take a look at cryptocurrencies, and I don't know what the intrinsic value is there, given the fact that they are intangible.
Right.
And so, even so, if that's one of the bigger arguments for it, that they're anti-inflationary, then I would sit there and say a little inflation is not necessarily a bad thing. It's when inflation comes about because of a collapse in the confidence of the currency, as we saw in the Weimar Republic, as we saw in Hungary after World War II, as we saw in Zimbabwe at the beginning part of this century. That was a collapse in the confidence of the currency itself. If we ever see that with the US dollar, then perhaps we would have that runaway inflation, and that argument for cryptocurrencies, might make a little bit more sense. But 3, 5, 7, even 10% inflation is not necessarily a wholesale repudiation of an economic system or society itself.
I mean, you need. I think it's 100% inflation over a 3-year period to be considered hyperinflation.
Yeah, and it's and where we've seen that, we've seen a wholesale repudiation of an economic system and a society
Exactly.
and financial system. And that's when the inflation ruins pension plans. That's when the inflation ruins savings. After the dissolution of the USSR and devaluation of the ruble, all that stuff. That's when you have that. Not when commodities prices are running a little in excess of where they have been, where the inflation's targeting, where the Fed's inflation targeting 3% over the next 2 years as compared to 2% or something along those lines. It's when there's people lose all their faith in the system, and we're not there yet. And we're not there yet. So that argument about Bitcoin being a hedge against inflation, maybe, but it's a hedge against really, people losing complete confidence in the system.
Exactly.
And so until we get some such point, 100% over 2 years, 3 years, whatever you just said, till we get to that point, okay, well, I think maybe that argument's a little bit weaker than it needs to be. And that sound that you hear are people calling me on the phone, and actually probably threatening my house. But going to soap my windows, put gasoline in my yard, all that stuff because of what I just said about Bitcoin. Cryptocurrencies, and understanding, Sam, you and I both have a Coinbase account. We both have it. It's just, but we have to be realistic when we look at an asset class, when we look at another investment alternatives, what are the pros and cons, and we have to make sober judgments about them. Fair enough?
Yep.
All right, guys, thank you so much for listening. We always love to hear from you. Also, if you have any questions or any comments, by all means, please let us know. Drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more, hearing more of what we have to say or how we think, you can always go to oakworth.com. Good night, Sam. Sorry about that. You can always go to oakworth.com and take a look underneath the Thought Leadership tab. Find all kinds of interesting articles there. Now, Sam, I'm going to give you another shot to have the last word on cryptocurrencies here today.
That's all I got.
That's all I've got today, too. Y'all take care.